Welcome everybody to our Unconventional Wisdom CSE podcast, video podcast in Thursday at 10 o'clock. And glad you're able to be here today. Our site is compoundstockearnings.com, compoundstockearnings.com. If you go over there, you can sign up for our free cow report, which will come out tomorrow afternoon, Saturday date. And you learn a whole lot about CSE. There's innumerable emails, usually things 80, 85 pages long. Innumerable emails from all our clients and our folks that are here today. Randy, Keith, and well, I don't see Keith yet. He's usually a little later. And Tony and Mike. And Tony will not be here today. Mike is here. And Marcus, the engineer, is here, hiding behind the blob on the screen. And any questions you have, or anything you want to talk to these people about, you can call 214-377-1108, 214-377-1108, and address any questions or comments to these gentlemen and myself, and we'll get back to you. Also, Micah is in control of the chat room or chat, whatever you call it, space on YouTube. So if you want to communicate via YouTube, he will catch that message and read it, and we will get back and make comments or whatever. So I don't have any great news stories today, other than we've been keeping up with what's been going on down in Puerto Rico. It appears the governor has decided to resign August the 2nd, so they quit having their mass huge rallies, at least for a few days. Now, I understand that the person that's supposed to step in to be governor is there's Keith, is just as disliked evidently as this current governor. So, except it's a woman. So we'll see what happens. Hey, Keith, how you doing? Keith's getting set up.
Hey, Joe.
Hey, good. Looking good. How's it going? How's weather up there?
Oh, absolutely beautiful today. After that hot, steamy stuff, it's just gorgeous out today.
Yeah, it's nice here. It's only about 80 something. I was only supposed to get to 90. We've had a lot of 100 degree days, 101 degree days, but so it's going to be 90 now. So I was just giving the introduction. And Micah, do you have any YouTube chats yet?
Let me pull it up. I haven't pulled it up yet. So I'll get that going in just a moment.
Okay. Tony's not going to be here, so we've got a full house except for Tony. So Randy, let's start it off with you. What's going on?
This is a eventful week for me. I had oral surgery on a back molar that I had the correct root on, so I'm just now kind of able to talk without too much pain today. So been a little bit light on trades, but we did do with the advanced charting with advanced charting platinum service. That's where we use the proprietary compound stock earnings advanced charts to look at the beginning of momentum. And we actually did enter an Intel position last week, actually, and it closed out on Monday for a 8.5% return for the week. So we're in that one for a week. And I know Mike is going to talk about being in for like 15 seconds today, but there are ones that don't take the need for you to watch moment by moment by moment and still get a nice return. On the covered call side, which we also have the platinum covered call service, and the platinum services, they include a weekly coaching webinar where we go through live in the market, watching the charts, talking about the techniques and the positions and entering and exiting and exactly how to do the processes. We do that right there online live in the market. You get to see exactly what we're doing. And those are then recorded at the same time, and you can watch them over and over again, or you don't have to be there while they're being conducted live, and you can watch them later for your training as well. But if in the covered call, which is buying a long position and selling a short against it in the near week, we already closed out 3 positions on Friday for between 4 and 7% return for the week. That was for the whole week long. The covered calls usually last the week. And waiting on 3 other ones to close tomorrow, which are all deep in the money right now. And that's what we do. We sell deep in the money calls, which means that the market doesn't have to go up. The stock doesn't have to go up in order to retain that profit. It can go up or down because that's what they do.
So those are Friday expirations for tomorrow.
Yes, those are weekly expirations that have Friday expiration, and so 3 of them will close out tomorrow.
Yeah, we need to make this clear when he says 3 or 4 or 5% for the week. That's for the week. That's for the week. We used to shoot back before we had these weekly expirations. We still have a third Friday expiration, which is really just a weekly expiration, but it's a third Friday, and we were trying to get 5% per month, 3% and 5% per month. And now with these Friday expirations, he's getting that same kind of return, but getting it on a weekly basis, which is absolutely huge. So that's like 20% a month instead of 5% a month can be, and absolutely huge. And that's Randy. That's a good example of how things have changed over the years. Since the old days when we had dial-ups and all kinds of high commissions and everything, and now we have weekly expirations. It's just amazing. In some cases, we got stocks that will do 3 times a week, Monday, Wednesday, and Friday, expire. Incredible stuff. Well,
I was a little bit off on my calculation. The IBM position that I closed out on Friday was 25% return for 4 days.
Really, 25%.
Yeah, on IBM, and so we're not doing like speculative stocks. We're not going out there into companies no one's ever heard of. For my cover calls, I do the blue chip stock, so that it's not companies that have a chance of going out of business tomorrow.
And there's probably people that subscribe to your service that think you even trade fast. I mean, there's probably some old guys that think your trades go pretty fast when they go in just like 2 or 3 days versus Micah's Tony's in a few seconds. And then Keith's sort of our catch-all man there. He's got all ages. So
hey Joe, could I jump in real quick?
Sure.
So I had a phone call. They didn't want to talk. They had to leave. Didn't want to talk on the podcast, but had 2 questions. I wanted to know about advanced charting course. Are you still teaching an advanced charting course? He's wondering. He's been a client for a long time and he's curious.
Okay, Randy, do you still have any advanced charting courses?
There aren't any scheduled right now, Joe, so we'll have to talk about that.
Okay.
Okay. Yeah, because he mentioned what's called the flex charting. Is there any training on the flex charting?
I don't know about flex charting. We ever had flex charting? I don't think so.
Yeah, I wasn't sure what that meant. That name. Do you guys recognize that? Might that be the ice charts?
Yeah, but
yeah, the ice charts for.
Is that what he's flex charting?
Yeah, the developers, not the developers, but the software guys.
Yeah.
So do you guys ever? Is there any training on the ice charts?
No.
So anyway, so you have a client who's requesting both of those. So
yeah, well, we've been talking about that, about do that. Randy and I'll get together. We'll work up something on the regular advanced charting, and then we'll work up something on the ice charts also.
Okay.
Joe, I did record a teaching video on how to use the new toolbox in the charts, which includes, and mostly focused on the ice charts and the CSM charts, but that's out there that anybody can look at on the link. It's out there for them to look at if they subscribe to it and they want to know how to get started on it.
How did they get to that? They got to subscribe to your service, right?
Yeah, well, to get to the intro video, anybody can get to that. But yeah, to subscribe, I think to get to the CSM charts, I think you need to be subscribed to my service.
Well, how do they get to the one that anybody can get to?
I'll send you the link to it.
Okay, send me the link and I'll put that out in the Cal report this weekend.
Okay.
Okay. Yeah, so I hope that answered the gentleman's question. So that's good. That's good. Okay, Keith, what's going on with you there?
Yeah, last weekend had a really great 2-day seminar on credit spread trading and the CSM, both the long and the short-term CSM. And I presented a lot of new material on the short-term CSM that I thought was just amazing. Don't know if you've heard any feedback from the seminar or not.
I have heard feedback from the seminar, and the emails will be in the Cal report this weekend.
Okay, good. Hopefully they were good.
They were real good. Yep.
And then I did a CSM trade on Monday this week for a 4% gain. So it's just that the charts have been really squirrely the last couple days with the Mueller testimony and then the news of a China discussions on Monday. It's thrown the charts really wacky this week.
Yeah. Okay. Let me say again, go to compoundstockearnings.com and you can sign up for the Cal report, which we've mentioned several times now, which it's free. It comes out every Friday. It's dated on a Saturday. It's been around for over 20 years. And there's questions in there. There's comments from people. There's what they're doing and reporting how they're doing. And then these gentlemen respond if they're asking for information and if they need help on something. So it's compoundstockearnings.com and it's the Cal report. And that's totally free. And also the site has all the programs we do, all the seminars we do, any free seminars and all the things that we have like the podcast here and all of that. So it's really a great site to find out all about CSE. So, excuse me, compoundstockearnings.com is where you want to go. Randy, you had mentioned about kind of a slow market the last couple of days. We ran into that on the micro moment little sessions in the morning. We had a pretty good Monday. We had a total of 23.42% returns on Monday over 7 trades. Tuesday, we only had 2 trades. Each one was 2.10%, one on Apple, one on QQQ. Yesterday, we had no trades. It was a 0 day, which is really unusual. And then today it perked up and we ended up with 8 trades for about 23.04%, which is almost exactly within a fraction of what we had on Monday. So it's been a good week, but certainly not like it normally is, where these things really sort right off when the market opens, and we'll do 7, 8, 10 trades or something like that and walk away 30, 40% sometimes. So anyhow, okay, Micah, do you have any YouTube questions yet?
Yeah, we do. One feedback for Keith and one question. I only listened Sunday afternoon to Keith training. It really helped. He does a great job of describing what to look for on the CSM chart in conjunction with ICE chart. So there's a little props for Keith. And then we have a question. Keith, where can we find the recording of the seminar you did last week?
The 2-day teaching seminars are not recorded, so you can't go back and look at those. Sorry.
Okay.
My weekly webinar that I do on my Platinum service is recorded, and you see that that's up there for 2 weeks afterwards, but not the seminars.
Okay.
But Keith, just to add on to that, the seminar is not recorded, but once you pay for the seminar, you can re-attend it every time that it's offered for no additional charge. So you can go back and get a refreshment on that.
Yeah, when you subscribe to Key Service, Randy Service, excuse me, Tony and Micah Service, when they do these trades, these are real trades. They're doing in their accounts. These are not fake trades, and you get when they're getting ready to do something, you know exactly what they're getting ready to do, so you're prepped for it. And then when they execute it, they let you know they just executed and what price. And when they get out of it, they let you know that. So it's just a great way. You get an email, and you also get you get if do we have those on the it's just email, right? Keith, and yours coming through during the week when people are following your trades.
Yes.
Okay, good. Okay. So that's what you get when you subscribe to their services. And obviously they're making a lot of returns, and they've been around here for an awful long time. So obviously a lot of people still tune into them, and they're making money for a very long period of time. Did you say you had another question there, Micah? You too?
Yep, we got a couple more. Next couple are for Randy.
Okay.
Now that I've rejoined CSE and Micromoment after a long absence, I want to know where to find the advanced charts. I have the ICE charts, but not the advanced charts, ? So where are the advanced charts located now that that streaming link is gone?
The advanced charts are located in the toolbox, the same place that the ICE charts are. So on the drop down where it says chart, on the drop down they would just select the chart 1 and chart 2 to get advanced charts instead of selecting the 1 minute.
Well, but they're in the toolbox, right?
Yeah, it's in the toolbox, right?
Yeah. So you guys subscribe to the toolbox to get those charts. Yeah. The toolbox has all the things that we do to manage positions, and so it's really an important thing to subscribe to. It doesn't cost a lot of money, and got all the tools to help out. It's got option change. It's got just all kinds of tools in there that help you manage these positions. So
Awesome.
Any other one?
Yes, they're curious about the prices of Randy and Keith's services.
Go ahead, Randy.
Well, they can email support@compoundstockearnings.com and find out, because it all depends really on how many services that they're in and how long they've been around, that type of thing. So to get specifics for them, send the email to support@compoundstockearnings.com, and Sue Ann will look that up for them.
Yeah, I don't think we have a service that doesn't have the feature where if you pay for it and then for some reason you drop out and you stop paying, and then you decide to come back a month later, or a year later, or 5 years later, you get back in with no additional charge. And I think that's the same on all our services. You just have to start paying the same thing that you paid before. So all the services are that way. It's worked out real well. We have people all the time. Like I had an email the other day from a gentleman that had been with us in 2008, a long time ago. And one thing or another, he dropped out, had an illness, and anyhow, he's just now getting back after all these years. And his original workbook, which you would bring to the seminars, was out of date. So I had him give Sue Ann the last pages of his workbook. And I think he was 75 pages short. So she emailed him the additional 75 pages. So you always have the ability to get caught back up, even when the circumstances are such that you have to drop out for a little while. But it's amazing that the number of people that come back, But, it's all kinds of reasons people drop out. They just change jobs or something happens in their life, and then they come back later on. Okay, Micah. Tell me I've already gone over the fact that you guys had a great Monday, had a great day today. Tuesday and Wednesday were pretty much nothing on Wednesday, and Tuesday was just a couple of trades. So how's all your stuff going?
Yeah, good. We've had, it's a little bit confusing. People have been a little bit confused why we haven't been in as much, because we've had a lot of volatility. The volatility is just not very directional. We have a lot of buyers and sellers, but they are, pretty equally spread. So you'll get a lot of bouncing action, and then something will start to take off in a type of move we normally enter, and it would reject and spike right back the other direction. So we've had to be very cautious this week for sure, because there's a lot of volatility in the wrong way, a lot of uncertainty, and quick movements even on moves that should hold through. So I've been really cautious with our entry, and we're very aware that, you know, we're here to do really well in the long term, and you know, we're looking over the course of years for this. So if you get tangled up in the day-to-day, which people often do with this aggressive of a technique, they want trades. They don't want to have no trades for the day. If they open with a loss, they don't want to stop trading for that day, like even if nothing comes up. So it's really, really, really easy in this technique to force trades, and it's probably the #1 killer in this technique, is to force trades, because it's a very opportunistic setup. So so yeah, we've been taking it pretty slow this week, still up a considerable amount.
Yeah, y'all are up 46% plus a fraction.
Yeah,
40. But now, so what's wrong with that? There's nothing bad about that, you know.
exactly. It's awesome.
And we still hard to go. We could end up being, you know, 80%, you know, with what we're now, you know, by tomorrow. The other thing is, on their trades, their sessions, their seminars start in the morning, right when the market opens, and they're live, and it's on a platform that you can see their trades, you can hear them talking, and you see their advanced charting, their ICE charts, and so you learn from those charts exactly and precisely when you get in and when you get out of trades. There's this very visual like that, and then they'll have a session in the morning. Sometimes, if the market justifies it, they'll come back in the afternoon, because that platform stays up until 3 p.m. Central, when the market closes in Central Time, and then you'll get a notice on your cell phone that they're coming back. You know, I was just thinking about this, Randy and Keith. What we need to do right now, y'all are sending out those emails. You know, we could do, if we can figure out how to do it without killing Sue Ann, we could do the same thing where people would get those texts on their phones instantly, because emails sometimes get delayed. They may get them instantly. They may not get them for a day. And I'll try to get that worked out, and that will substantially improve, you know, your services with the programs y'all teach. What do you think about that?
Yeah, Joe, it used to do that on an app on both the Android and the Apple phones, but mine quit working, and just going out that choice doesn't seem to be working now.
Yeah, I don't know why, you know, because well, I'm glad to know that. What we'll do is just get it fixed. You know?
Yep. Yeah, that'll be good.
Yeah, that way people will get everything instantly. They'll still get the emails, because they can get those emails. They won't be trading off of them, but they can, you know, file them. So they'll have a paper copy of when you enter. You know, if you do any management trades, they'll have all that on paper, but they'll get the trades when y'all do them. So I'll be sure and try to get that fixed next week. It could have gotten lost in something when we were redoing the toolbox or redoing the website, wherever I got listed. So I don't know. We'll get it fixed though. So any more YouTube?
Yeah, I wanted to wait for a moment, but we got some TTM questions.
Okay.
So the first one, Micah, today about 8 a.m. mark, you prepped the 210 strike call, while E1, 2, and 3 seemed to be lined up for entry. You never entered. What were you seeing that made you refrain from entering? Time zones are different. So I believe that was 7 o'clock my time, I think I remember. And if you look back on the chart, you can scroll back on the ICE chart to see what was happening there. But we came out of a period from I'm going to move everything an hour forward to my time, but we came out of period of 6:45 to 7 o'clock, we had really strong moves up, but they would instantly get snuffed and get shot right back down. So 7:45, a minute and a half later, it moved like 20 cents up on the stock price really quickly, and then just sharp turned down and corrected like 11 or 12 cents almost instantly. Turned around in the next 3 minutes, it gained another 25 cents, pushed through its high a little bit. So it was just doing that really sharp up and down motion. The Bollinger Bands finally started to open up, and I was thinking about entering around 6:58. It was busting past another high, which was 208.22, and it pushed up to 208.37 really quickly, another minute and a half. We started to see that spread. E1 started to take off, and I prepped a couple minutes before that. But the reason I didn't enter was because I wanted to see if it would get snuffed again right above the high. And sure enough, within another few seconds, it again rejected about 10 cents on the stock price.
One of the nice things about Micah's terminology in the financial world, like I've never heard of a trade being snuffed. So, I mean, it's cool that you use that, but what does being snuffed mean on a trade?
Snuffed is like if you're running really fast, full sprint, and you don't see the brick wall in front of you. Kind of like that. Just going, done.
Yeah, there you
So,
go.
yeah, rejection, I suppose, is the proper financial term. But yeah, we were seeing really hard rejections, and I knew it was going to push. That's why I prepped the call, but I didn't trust any one specific entry because it could have really easily been upside down instantly. So that's why we avoided that one.
What's
Hey,
interesting?
let me throw one other thing in there too on the charting that Micah brought up there, scrolling backwards. That capability on the new charting things has been invaluable for studying the charts and picking trends and trying to understand indicators for entering and exiting trades. And I've been using that a lot recently. In fact, last week is when I finally identified a new parameter that just really is outstanding, and being able to do that on those charts is fantastic.
I agree.
Yeah, and remember, when they're doing this stuff, and all three of them here, they're describing this stuff. It's live, and you're seeing it. So that's what you're doing. You're learning how to use those charts to effectuate these trades. And the neat thing is you can do them on your cell phone now. The charts have gotten so good on cell phones. The trading platforms are so good. You can literally, maybe look a little strange, but if you don't mind looking strange, you can do all this stuff on your cell phone also. So it's good stuff.
True. Yeah, and then for TTM again, Micah, what signs tell you that there's probably a push up or push down in the moments ahead? And then re-volatility, where do you look on your broker's platform and CSE charts to gauge any moments volatility? How do I answer this? That's kind of where the magic happens, so to speak. And I'm sorry if this answer is unsatisfactory, but there comes this sense when you've been looking at it a long time. For me, it's mostly in the option chain, how the bid and ask are fluctuating, the spread increases and decreases. I don't know 100% what causes every little factor like that, but once you've been looking at it, you can see that fluctuation start to happen. You can kind of feel that volume come in moment to moment. the only real volume indicators on an option chain are for the whole day. And it's just a cumulative growth thing. So you can't really base it off that, but the only indicators I would say are the Bollinger Bands. You can see those opening up pretty clearly on the ICE charts. That's honestly the number one view of volatility. But then also just make sure to really keep your eyes on the whole strike line that you're looking at, how the spread moves, all of that, because you can really get a sense of the certain ways that the spread opens and closes before a move, things like that. But yeah, I would say the Bollinger for sure, and then also the angle of the red line on E1. The steeper that angle turns, whether it's starting to head down or up, is the steeper it is, the more speed it's going to have, because the more volume that's in that moment to moment. So, and then also go ahead.
I think what's really cool is when it does hit that wall and snuffed, a little hand comes out like that. You know, a little hand.
Hand?
A little hand comes out when it's snuffed.
I'm confused. I'm sorry.
Okay.
So yeah.
Put that into the chart.
Yeah, there we go. So yeah, that's what I would say on volatility. I hope that makes sense for you. And then we got one more. Mike, I've been on Micro Moment only for a few days. One request for you and Tony. I know things happen really fast, but please could you try to tell us the entry price you are shooting for before you hop in? Yes, that's a good request. People ask us to tell them our limit price, which we've explained a few times that we can't do because of how much it fluctuates and how we're constantly adjusting. We would just clog the airwaves. We could probably try to give a general range, just as long as you're aware that it could feel quite a bit different than that, because we would adjust, and then also it feels different than your limit price sometimes.
Well, a lot of times you say what the price is when it's filled, but a lot of times you mumble it, and because y'all are moving so fast, and once you're turning around to immediately put it to get out of it, and but that's something that we can definitely try to improve on. That's for sure. Absolutely.
Yeah, we'll do our best to improve on that. As a remedy right now, I would say the biggest thing to focus on is I've noticed people in the service really undervalue the preps. There are some times when it's a slower market that we prep something and then we'll let it sit for quite a while because the market's really slow. We're waiting for it to happen. But in the times of high volatility, which is when we make probably 80 or 90% of our profits, when we prep something, we're often in it 10 to 15 seconds later, if not sooner, in those really high volatility times. So really pay attention to where the prep is, because we're prepping for a reason. And as you go through the process, you'll start to learn more and more of the educational side of things, why we enter trades. Then you'll hear that prep and you'll know that when this last step happens, we're most likely going to enter. And then you can make your own entry, maybe even a little bit before or where we do, without having to wait for us to say, go through the whole process of filling and say we filled, because then you're not going to get the same price. So I would say pay a lot of attention to the preps.
I was just sitting here thinking that, and I'm going to check on this too. You're talking about GoToWebinar on the micro moment trading in the morning. And, you can see their computer screen on the GoToWebinar, you can see exactly what they're doing. I don't know why, because I don't know what that costs, but I know it stays on all day. I don't think it costs hardly anything at all. We could do that with Keith and with Randy and just sign in, guys. You could just sign in just like they do. And there it is. It shows your screen and everything. And then it can just stay on all day. Whenever y'all are doing something, then people can see what you're doing and all that. What do y'all think about that? Don't have any thoughts about that?
Seems
Randy
like
and
at
Keith?
times I'm a one-arm paper hanger at that. So I don't know, Joe. I'd have to think about it.
Okay, well, you wouldn't do anything any different. It would just be when you do something, it would be on there.
Yeah, yeah,
And then
Yeah.
you could always, just cut it off.
yeah.
And now, Randy, he would love it. He'd sit there all day, and he'd talk, and pretty soon he'd have little people dancing around. He'd have a regular show going on, So,
I can't talk that much, Joe.
well, you don't have to do anything any different. I mean, you wouldn't change what you do at all, except it would just be people would see when you do something instantly. They would see it right there, and I mean, you might get out of your chair and go to town and have a beer or something. I mean, but when you're there, you're doing something. When you're doing something, that's what I'm saying. But you wouldn't have to be there to do it. The back row moments, that's what happens there. I mean, they come in there and they try to do all their trades, and then things will slow down, and they'll say, "Well, we're going to leave down if the market warrants. We'll be coming back, and you'll get a notice." And that trade the moment stays on there all day. It's just a blank screen. They've got a little thing they put up instead of the chart that says, trade the moment. Oh, yeah. Well, I thought it was a brilliant idea.
Yeah. Well, it'd be like watching paint dry for covered gold.
No, that's the whole point. Because the people, would just come back if if y'all are doing something, they're seeing it. They don't expect you to stay on there all day, or get on there and go cut the grass or something, and come back and do a trade. However, it wouldn't bother the way you normally do things. That's what I'm saying. Now I know Keith would feel like a compulsion to be on there all the time. He'd have to get compulsion to do it. So I thought it was a pretty good idea. Are you flooded now with all kinds of requests, Micah, on your YouTube chat there about that idea? Everybody likes it, correct?
Well, he's looking up YouTube. I just want to add, Micah was talking about the preps. So when we're getting ready to do a trade, we send out an email that says, this is what we're planning on doing. That's what Micah calls the prep, so that this is what we're kind of looking at. And then we send out another email when it's done. So on Trade the Moment, that happens in like seconds. On covered calls, between the time that says I'm going to place my order at this and the time it fills could be a lot longer than that. So, but it's not like we just surprise people. It says, here's what we're planning on doing, and we send that out that says we're getting ready to place this order in our own live account.
Yeah.
Hey,
I just want to add that I just got 5.35% on a Trade the Moment while we were talking.
I want to try to add a call. A caller, are you there?
Okay.
Hello, caller.
Joe, I'm sorry, but I got to run.
Okay.
See you later.
Let me see if I got the caller. Can you hear me?
Yes, I can.
Okay, there you go. So, Joey, we have a caller online.
Okay, yeah, I hear the caller just fine. What's the caller's first name?
My name's David.
Okay, David, how can I help you?
Yeah, well, first of all, comments. I really appreciate what you guys are teaching and the way you teach it. I started studying with you about a year ago with Randy and the charts and trading. And over the last year plus, a couple of hundred trades, all good except for one. And so I really appreciate it. And it's very learnable to anybody that's thinking of joining, but it is hard to learn. Well, thank you. And I'm studying now with Micah and Tony every morning. I've been doing that a couple of weeks, and similar. I just think it's great teaching. I'm finding it to be a real challenge to learn this, but I imagine that that's just going to be a matter of time. And so well, maybe Micah, you can kind of explain to me, am I just a dumb guy or a slow learner, or I would just assume that it just takes many, many weeks of studying the charts and following what you guys do to start to figure out that sweet spot that you and Tony are hitting, where you see the push-ups, how you get in at the moment you do, for those short gains and so forth. But kind of a general question, if you understand the question, but I appreciate your comments on that, Micah.
Yeah, of course. Absolutely. Thank you for the question, and thank you for the support and good words. We appreciate that. Yeah, so honestly, the exact moment is a little bit overvalued from the overall strategy, because it makes us look really good when
It does.
when we make a trade and it's a profitable one. It's like, how did you know? You know. But the fact is, if you'll notice how many washes we have and 1 cent gains, people don't like really notice them because they're focused on, oh, he just made 15%. Oh, he just made 12%. That's crazy. But they don't really realize. I mean, how many washes do we have today, Joe?
Today, we had one loss and we had 2 washouts. Just neither profit or loss, and there were 8 trades. So 2 of them were washes and 1 of them was a small loss.
Yeah. So today, 3 out of 8 trades weren't even that way.
But it was still a plus 23.04%.
Exactly. We still made 23.4% because the strategy overall is super effective and it keeps us out of losing scenarios. That is honestly a huge part of why it seems like we're just nailing everything. We're really not, but we don't loss, and so we don't have those losses to visually counteract the gains, if that makes sense. So yeah, that's honestly the biggest aspect of that I can say. But and then the actual moments that it's super clear is when you have the Bollinger Pinches. We talk about those all the time. Definitely one of the most effective moments notice type things. If you get a tight Bollinger Pinch and it opens up stacked in either direction, it's probably going to continue past. And we can get in that a few moments later and still make a decent profit. And so keep an eye on the Bollinger Bands. Again, the angle of E1, the volatility comments I made from earlier, all those are super important. Yeah.
While the caller's still over here, I want to point out one thing that I just talked about last weekend. But it will work with any of these guys with their techniques. It's called my $5,000 1-year retirement plan. And you take and you put $5,000 in your account. And in the case of the trade, the micro moment trading, I said, they're making they made 23% yesterday. They're 46% so far this week. Take 6% 1 month, and after 1 year, this thing's in there 1 year. In 1 year, you put in $5,000 one time. You never put in another penny, and you just start doing 6% a week. Now you can do this with Randy's now that they have weekly expirations. That would be leap type covered calls. Work the exact same way. After 1 year, that $5,000 has grown into way over $100,000. At that point, you're getting 6% 4 times a month, right? In other words, that's what they made today. 23%, 6% 4 months be 24. So you just take out 6% then of that 100,000. So now you're pulling out $6,000 a month for your retirement, and of course it's bigger as time goes by, and you're still compounding 3 of those 6%ers in there. So the next year you've got hundreds of thousands of dollars in there, and you can your retirement income goes up astronomically. But you never have to put another penny in other than $5,000. You can do it with Randy's, when he's doing these weekly calls, and but the whole point is after 1 year, just 12 months, you never put in another penny. Your 5,000 is growing to way over $100,000. Then you start pulling out whatever percentage you've been getting on a weekly basis. You start pulling that out one time, leave the other 3 in there, and then pull it the next month, pull it out again, same way. And I call it my 1-year retirement plan. And that's absolutely, most times you see these retirement plans, these insurance companies, all these brokers that are so damn complicated. You got to you wait 45 years, and if you make it that long. So Randy, you could pull that off with your weeklies. You could do a weekly that way. You know.
Yeah.
Yep.
Yep.
Okay.
Awesome. Yeah. Does that answer your question, David? Or?
It does, very, very, very helpful, and I just, you made another comment today about, I think it was E2 and E3. And, after listening for a few weeks, it clicked finally. But I think what your point was, is you're watching those trend lines, either up or down, and then you get your confirmation from E1. So if E2 and E3 are trending up for a while, and then your E1, shoots, is red over blue, I guess, and the more it shoots up, that shows on E1 volatility as well as the Bollinger Band. Combination of all those things is helping you determine when you pull your trigger.
Yep. And one of the key things about the ideology of the strategy is the whole stock market, the trillions of dollars that goes through it every year, as big as it is, that whole is narrowed down to one question. Everybody's asking, up or down? Like,
yeah.
Trillions of dollars based off of that question, up or down. You notice we're never saying, oh, I'm not sure which direction it's going here. If we're not sure which direction it's going, we're not even looking at it. Nothing's prepped. Nothing's in the equation. We're going sideways and waiting. It's never a question of whether it's going up or down. We always prep the same thing. We never, talk about the possible cycles. We just say, oh, right now it's going up. And then we look for the opportunity to enter on up. It's never a directional question. It's just about when to get in the move that's happening. And that simplifies most of every difficulty you get from trading. So, yeah.
Yeah, and this morning, things to me look like they were lining up. And we talked about this, but you held off because it sounds like you were seeing the ticker go up and down and up and down and up and down. And so you weren't feeling that probability or confidence to pull the trigger. While E1, E2, E3, was saying what I've heard you say the last few weeks, lining up.
Yep. Yeah, and well, this morning it lined up pretty well. But this morning, so much a question of if it would go up, but if there was enough room left in it, because it was rejecting really hard every time, and you wouldn't have it. That's what happened on the first trade of the day. I got in and it turned so fast that I ended up losing 4%, which is more than what we usually do, and that was as fast as my fingers could move. So,
was that?
So yeah.
What do you call it when it hits the wall? What was that?
Snuffed.
Snuffed. Yeah. Okay. You were snuffed.
Yeah.
Got snuffed. Yeah.
So that's an example of you getting snuffed.
Yeah, exactly.
Yeah.
Exactly. Like the first trade of this morning is exactly right. And there was a really high probability of that happening on that call I prepped. It didn't, but it likely.
Now, a long time ago, when Micah first started, everybody has to go through this. He would have much larger losses because he was just reluctant to get in and get out like that when it wasn't going the right direction. And when the chart turned on him and said, "Hey, you're going the wrong way now." But because time has gone by and he's become experienced, this 4%, I hadn't seen you lose that in a year. Normally it's 1%, 2%, 0.5%. It's a wash, something like that. So that was a real snuff.
Yeah.
Yeah.
Exactly.
Do we have time for one more question?
Sure. Go ahead, Dave.
Okay, good. Thank you. So going back to what you were talking about, Joe, and compounding, I've also been hearing Micah and Tony talk this week about, maximum amount of contracts at any given time that they think that they could get filled. So I would assume that at least on compounding on the micro moment, there's a limit. But if you're building up your account, you're using those funds with Randy's trading techniques and Keith's trading techniques. or maybe diversifying it. But maybe you could talk a little bit, Micah, about where you do max out on the number of contracts if you want to bet more than less, and what you're looking at to tell you, like, don't go over this amount or you won't get filled.
Yeah. Maxing out totally depends on which ETF or stock you're trading. For sure, they have much different numbers of available shares and a lot different fillability. But let's say that if you're making, like we do, like 4 or 5 trades a day, the point at which you max out, you're going to have bigger fish to fry. You could fill 10, 20,000 contracts, dollars, 10 to 20,000 on Apple pretty easily. And if you're making 5 of those a day and ending up at, 5 or 6% per trade, that's a damn good day.
Great.
You're getting into the point that like, regardless of everything, this still is a high risk strategy at its core. So you're going to be getting into the account value of wanting to do some of Randy's and Keith's trades and something that's a little bit slower, and because now you have the size to size in and out of both sides, manage your positions, modify things. Whereas this, you don't. There's never a double down. You're in and you're out. And if you want to do that with 30 grand at a time, then you can go for that. I personally wouldn't be comfortable with that unless there were some other protections placed in there. Also, when your account's up at 100 grand, you're not going to need as much of a percentage to make a lot more money as well. So yeah, I would say as you build up, I mean, if you're above PDT with 25,000 and let's see, if you're above with 25,000 and say you make 5 trades a day.
Yeah, well, one factor here that has going for the macro moment is you're doing a lot of trades, so there's diversification amongst trades. Most of the time, when you guys open a trade and you get out of them much earlier than you could have, then if you could have always waited and made a much higher percent return, and a lot of people do wait, but y'all have been trained to get in and get out, try to make 2 or 3%, and it happens all the time. All have made 2 or 3 or 4%, you're out, and people send us emails later on, and they got 10 or 12 or 15%, the exact same trade, because they kind of hung in there. Now, yeah, I don't personally agree with that, but that in reality is what happens a lot of times. But you're like, you said things are high risk, but you've got diversification because you got so many trades, and you're never in one very long. You never in it overnight, obviously. So.
Yeah, exactly. But yeah, if you're in, a $25,000 account and you allocate yourself a fifth for every trade, that brings your position size to 5,000, which would fill very easily. And I mean, if you make $5,000 isn't much to trade with in retrospect to what a lot of people trade with, but I mean, we've done 1,700% in the few months we've been on. So that's 17 times. That's 85 grand off of $5,000 positions. So, and we're not even close to halfway through the year. So, I wouldn't say you really need to approach that cap unless you're a multimillionaire really looking to make some moves. I don't think it's a problem to really worry about, if that makes sense.
Because I was hearing, Mike, I think, was commenting, sometimes it's hard to get filled on 50, 100, 200 contracts. And, if I get to the point where I'm, close to as savvy as you two are, and I wanted to increase the bets a little bit, I'm just curious about how that works and how you may not be able to make a trade because you bet a little bit too much.
Yeah. The answer to that one would be sizing according to the confidence. Every trade is not the same size because I don't believe in everyone the same amount. But as you size up, you need to be more sure because it's not that it's tougher to fill. You could fill as much size as you want instantly if you went against the position. If you went closer to the bid, underneath the bid, you would definitely fill, but you'd be immediately upside down. So difficulty filling is more talking about
against the position.
Right?
What do you mean by against the position?
Yeah. So say the bid ask is at $49.50, 49 cents and 50 cents, and you're trying to fill a small position size. You're going to fill, on or below the ask, depending on the type of movement, really easily. As the position size goes up, it's not necessarily more difficult to fill. It's more difficult to fill at the same price. So if you want to fill a huge size, you'll have to fill at 51, maybe partial at 51, some at 52. And then you're going to need it to move more in your direction to...
I see.
Does that make sense?
Yeah, it does. Yeah, that does make sense.
Yeah. So difficulty filling only means difficulty filling at the best price because there's only a certain amount of shares available to buy right there. Yeah.
Yeah. Okay.
You could fill as much as you wanted. You're just going to be immediately upside down.
Yeah.
Okay.
Yeah.
We're going to call it a day. We've been on here 5 minutes short of an hour, almost an hour. Thank you very much for calling in, Dave. Appreciate it.
Well, thank you everybody for what you teach. It's 2 years in, and I appreciate it all. Thank you.
Well,
Thanks, Dave.
Come on back every Thursday and call back in with some more comments and questions.
Yeah, I was going to say, we did not pick David. He picked us. He has such a perfect radio voice, and he asked us really good questions. It may seem like we chose him, but he actually just called in at random. He's a real client.
There you go.
Yeah.
Thank
I
you.
appreciate it, Dave.
Joe, I gotta get going. I gotta get on my own teaching webinar that I'm getting ready to start in 3 minutes. So
We'll talk to you
everybody
later.
has a good day.
Thank you.
All right. See you later, guys.
Bye. Bye.
And